Here's why UK investors are going all in on this Quantum AI stock. By James Duncan, World, 7-minute read. The artificial intelligence revolution has officially arrived, and with it comes a silent crisis that few investors are talking about, the UK's looming energy crunch. Every major technology company, from Silicon Valley to Seoul, is racing to build massive AI data centers capable of processing unimaginable amounts of data. These facilities are the beating heart of the new digital era, running everything from autonomous systems to quantum simulations. But there's one major problem. They consume enormous amounts of electricity. And nowhere is this pressure felt more acutely than in the United Kingdom. High voltage, the AI boom meets an energy bottleneck. Over the past 2 years, the UK has positioned itself as one of the world's leading hubs for artificial intelligence and quantum computing. With hundreds of startups emerging, and global tech giants like Amazon, Microsoft, and Meta scaling their operations, the nation's digital footprint is expanding at an unprecedented pace. However, while the government is encouraging this tech explosion, the power grid is struggling to keep up. AI servers and quantum computers are energy-hungry beasts. A single advanced data center can consume as much electricity as a small city. Multiply that by dozens of new centers being planned across London, Manchester, and Cambridge, and it's clear the existing grid is stretched to its limit. Renewable sources like wind and solar, though promising, remain intermittent. Nuclear energy, while clean and steady, takes decades to build. And the UK's net zero by 2030's vision, though admirable, doesn't solve today's problem. If new sources of on-demand, stable power aren't added to the grid quickly, the UK could lose its competitive edge in the global AI race. United Kingdom, the Trump technology prosperity deal, a catalyst for change. Just a few weeks ago, President Donald Trump visited the United Kingdom to sign what's being called the Technology Prosperity Deal, a landmark agreement designed to supercharge the Transatlantic Technology Alliance. Under this deal, hundreds of billions of pounds are set to flow into the UK over the coming years. The funds will directly support expansion of quantum computing infrastructure, development of AI data centers, a massive 10x increase in national energy capacity. This agreement marks a turning point for Britain. It's not just about political cooperation, it's about securing a technological future. With the US and UK now moving in lockstep, the stage is set for a new generation of energy and computing innovation, and one small London-based company is perfectly positioned to capitalize. Lightbulb, the company catching investors' eyes. Mast Energy Developments, LSE, Mast. While the world's attention is focused on big tech, a smaller but highly strategic company is quietly making headlines in financial circles. Mast Energy Developments, listed on the London Stock Exchange under ticker MAST. This innovative UK firm specializes in building dynamic electricity generating (DEG) assets, small, modular, and highly flexible power plants that can be activated within seconds to stabilize the grid. Think of them as the first responders of the power world. When renewable sources dip or demand spikes, these units instantly kick in to fill the gap. Unlike traditional power plants that require years to plan and construct, MAST systems can be deployed quickly, scaled easily, and generate revenue almost immediately. Each site uses reciprocating gas turbines, RGTs, battery storage systems, and green gas technology to deliver fast, flexible, and low-emission energy. This design allows MAST to support the grid during renewable shortfalls, supply AI and quantum data centers with instant power, earn income through the UK's capacity and balancing markets. The beauty of MAST's model lies in its speed and scalability. While traditional utilities are tied up in red tape and multi-year construction projects, MAST's modular units can be operational in months, not decades. Brain powering the future of artificial intelligence. Artificial intelligence is often described as the new electricity. But that's only half the truth. For AI to function, for large language models to train, for quantum computers to simulate, for autonomous vehicles to calculate, it still needs real electricity. Every surge in AI capability demands an equal surge in reliable power. Without it, even the most advanced algorithms are useless. This is where Mast Energy Developments becomes a cornerstone of the new digital economy. Its assets are built near high-demand zones, such as data centers and industrial hubs, ensuring local reliability and minimal transmission loss. In effect, Mast is building the invisible backbone that will keep Britain's AI future alive and stable. Rocket the 1000% potential. With the Trump deal injecting capital into UK energy infrastructure, analysts believe companies like Mast could see explosive growth. Some early investor reports even project a potential 1000% increase in share value, as demand for flexible energy skyrockets. Unlike speculative tech firms with no revenue, Mast's projects are real, operational, and income-generating. Its business model thrives on immediate cash flow and recurring revenue from energy markets that reward flexibility. Every new DEG site Mast deploys increases both its revenue base and national importance. As Britain races toward AI expansion, these quick-to-deploy energy hubs could become essential national assets. Investors are comparing Mast's modular power plants to Rolls-Royce's small modular reactors, SMRs, but with one critical advantage. Mast's technology is available right now, not a decade away. Seedling a greener, smarter energy future. Beyond profit potential, Mast's model also supports the UK's green transition. The company's hybrid systems combine natural gas with green alternatives and energy storage, providing flexibility without compromising on environmental goals. As hydrogen and biomethane technologies mature, Mast's DEG assets can seamlessly transition to cleaner fuels. This adaptability ensures the company remains aligned with the UK's long-term net zero commitments while solving the short-term reliability gap. Chart increasing why smart money is paying attention. Institutional investors, family offices, and private equity firms are increasingly taking positions in energy flexibility assets. The logic is simple. AI growth is unstoppable. Power demand is soaring. Traditional sources can't react fast enough. That leaves companies like Mast Energy Developments, nimble, innovative, and strategically vital, at the center of a multi-billion-pound opportunity. Mast is not just providing energy, it's providing time, the precious seconds and minutes that keep critical systems alive during renewable drop-offs or sudden consumption spikes. In an economy that runs on data and uptime, those seconds are priceless. Checkered flag, the bottom line. Britain's path to becoming a world leader in quantum and artificial intelligence depends not only on algorithms or hardware, but on energy. Without reliable electricity, data centers go dark, progress halts, and innovation dies. That's why Mast Energy Developments, LSE, Mast, has emerged as one of the most compelling investment stories of the decade. Fast, flexible, efficient, and green, Mast's technology offers exactly what the AI economy needs: instant, intelligent power. While others wait for billion-pound nuclear reactors or inconsistent wind forecasts, Mast is quietly turning on the lights, literally, for the future of British innovation. And as the world wakes up to the energy challenge behind the AI boom, smart investors are already making their move. Because in the race to power the future, the winners will be those who can deliver energy on demand, right now.